Hi, and welcome to another presentation from your business tutor, learning your way, anytime, anywhere. Creating financial information clearly provides an organisation with a large number of benefits. However, whilst I don't think anybody would disagree with that statement, I think some may query if anybody outside of a business's management team would find such information useful. So with that in mind, let's find out by exploring the topic, users of financial information. So what are we going to learn in this presentation? Well, first of all, we're going to find out who uses financial information. Then we're going on to explore what financial information do they use. And then finally, we're going to investigate how that financial information might be used. Probably the best place to start is to ask, what financial information could you obtain on an organisation? There is a plethora of financial information that organisations can make available to those who are interested. For example, an income statement not only shows how much profit a business has made in a year, but also highlights other important pieces of financial information such as sales revenue, gross profit, cost of sales and expenses figures. Equally, a statement of financial position provides a huge amount of performance data such as how much the business is worth, all the way through to information on assets, liabilities and equity. Further still, and as we have discovered previously, information from both these statements can then be used to produce more refined data in the form of ratios such as the gross profit ratio, the current ratio and the rate of inventory turnover. However, the financial information a business produces does not end there. We have also discovered that organisations produce cash budgets, which show how much cash a business is expected to receive and spend over a certain future time period, and hence what their liquidity position will be. But even more than that, some large organisations also produce cash flow statements, which show how they generated and spent their cash over the previous year, and how this affected their liquidity position. And finally, other information that may be produced and which would also prove useful would include a company's share price and their level of dividend payment, as well as information on any loans the business has and whether or not they had to provide security for them. Of course, as useful as all this financial information is, it needs to be remembered that it is only companies that are legally obliged to publish such information. In fact, they must do this annually by submitting their financial statements to Companies House, from where interested parties can then access them should they wish. Okay, so that now leads us nicely into our next question, which is, who uses financial information? The simple answer to this question is summed up in one word: stakeholders. That is, any individual, group or organisation that has a positive interest in the success of a business. As such, this would include internal stakeholders such as employees, managers and shareholders, as well as external stakeholders including the government, suppliers and banks. Of course, that still leaves us with one other organisation that is not classified as a stakeholder, but which I'm sure many of you will already have thought would be interested in a business's financial information, and that is their competitors. Okay, let's now move on to our last question and ask, how is an organisation's financial information used? The stakeholder that uses an organisation's financial information most are managers. This is because managers are not just judged on the financial performance of the business they run, but also require this information to help them make informed decisions. For example, managers will use information from the business's income statement and statement of financial position to evaluate annual performance, but also to compare one year to another to identify strengths and weaknesses. In fact, this process may not just involve looking at individual figures, such as gross profit and current assets, but may also include calculating ratios, to see if targets that were set for improvement, for example, to increase the profit for the year ratio to 25%, have been achieved or not. What this shows is the importance of using financial information to not just support decision making, but also to help with target setting and evaluating outcomes. Another stakeholder that uses a business's financial information is shareholders. As you'd expect, they would be interested in the current share price of the business, as well as expected level of dividends to be paid. This is because the share price tells a shareholder what their investment is currently worth, whereas the level of dividend informs them what level of return they can expect on their investment, which, when put together, helps a shareholder decide if they should hold or sell their shares. A third stakeholder who would also be interested in the overall performance of an organisation would be a bank. This is because before agreeing to lend any money, a bank will want to check an organisation's cash budget to check that they don't have any cash flow problems, but also their income statement to make sure they are generating enough profit to repay the loan. And of course, they will also want to look at the business's statement of financial position to see if there are any assets that would provide good security for a loan. However, as well as stakeholders who may be interested in the overall financial position of a business, there are also some that have more specific interests. For example, the government's tax authority, the HMRC, would be specifically interested in looking at a business's income statement to find out what its profit for the year is, so that the correct corporation tax is charged. But also a business's sales and purchases to ensure the correct level of value added tax, VAT, is being paid. To the same degree, suppliers who sell on credit would be particularly interested in a business's ability to pay its bills as they fall due. As such, a supplier would want to look at an organisation's current and acid test ratios, as well as their cash budget, to ascertain if they have the liquidity to pay them. Equally, employees or their trade union representatives would have a big interest in looking at an organisation's income statement to identify what their profit for the year is. This, as you might expect, is so they can work out what level of wage rise they should ask for the coming year, but also to check that the business is spending enough on health and safety, as well as training for their staff. And lastly, that leaves us with our only non-stakeholder, and that is competitors. Their interest, like those of managers, is very comprehensive, in that they will want to look at both an organisation's income statement and statement of financial position. This is because from these two statements, a competitor will be able to compare key figures such as profit for the year and net worth, but also undertake ratio analysis to see if they are doing better or worse. In fact, this type of analysis can be really useful to a competitor, as by copying what another business does, they may be able to improve their own financial performance. For example, by cutting expenses. And finally, a competitor may want to look at a business's financial performance to help them decide if they should launch a takeover bid for them or not. In fact, this process, which is referred to as due diligence, is an important part in the takeover process. So what did we learn in this presentation? Well, first of all, we found out who uses financial information. Then we went on to explore what financial information do they use. And then finally, we investigated how the financial information is used. There is no doubt that a number of different parties are interested in the financial information produced by organisations. In fact, it would probably be fair to say that the financial documents created by a business are the single most important piece of data that stakeholders and competitors use to evaluate an organisation's performance.